What's good, guys? Welcome again back to my channel, and I'm super excited again to bring you with another episode of my forex journey or my life journey. And I'm also excited for something else. And last week, being the third week of the month, September, I on Sunday I called out how I was going to be seeing more dollar weakness. That means the dollar was going to be more weakened. That means things like Euro USD, GBP USD, AUD USD, NZD USD will be rallying to the upside. And you guys can see how that played out very like I was like, what the fuck? What's going on in the US? Is anything really happening that's making it go this high? I didn't expect it's going to go that high. I expected it was going to go higher. Like, guys, why am I excited? I'm excited that at least when there's a different level when you get to a point in your trading and you call out trades and you see them play out as accordingly as you expected. You just watch it do what you expected it to do. Just as if this whole market you've been battling for 1 year, 2 years, in my case for like 2 years plus. Finally, you're able to say, okay, don't be prideful. You can tell it, okay, I'm seeing a buy, and it's actually buying. I know you get me, and it's very exciting. It's a very exciting feeling to call out trades, and it goes in that direction. Now, it doesn't mean I'm a market wizard, but all the I've seen recently my trading since I've been calling out lot of trades, and they're just going accordingly as I play out, as I called it out. And that's a very exciting feeling to have. Like, it's very, like, it took me a year, more than 2 years, to be able to achieve that kind of what is it called, that kind of mastery. All right, that kind of mastery. And I did I take the trade? Yes, I took a trade on Euro USD on my prop account and my live account, and that is what we are going to be actually talking about this video: live account or prop account. Which is one? Like, which one? I took it on my live account and my prop account, and I made money in my live account, and also made money on my prop account. But my prop account is not yet funded; it's still in the challenge phases, because, guys, prop accounts. We are already in the video. Prop accounts, man. Proprietary firm accounts. Let's call it the full name: proprietary firm accounts. What does it mean? They give you money. They say they will give you money if you pass so and so challenges, and then you get funded, and whatever you withdraw, it's gonna be they're gonna take some percentage, and you're gonna take some percentage. Guys, let me just put it out there. Like, I'll still tell you guys that proprietary firms are still gonna be the best for now. All right, because there's always this long age. Mind you, this is what the video is gonna be about: proprietary firm or live account. There's this long age argument between traders, prop accounts, and live accounts. But these things has advantages. It's for some people who have a different answer, while another set of people have another different answer. Or I'm not going to edit this. I'm just going to put it out raw out there. So, and that those two different people. One is the people that already have the capital, right? For me, if I had $100,000 of capital, what the fuck am I doing in a prop firm? I could just go there just to play around and see have if I can really play out with these guys, play with these guys very well. All right, I'll probably trade my life account. But for someone that doesn't have, no, 100,000 is too big. Let's start from $10,000. Not everybody has 5,000. Let's start from what I'm trading right now. Okay, I have total of $10,000 account because I have two 5K accounts that I'm trading. But let's just keep it at 5K. The first one I had was 5K account. So let's say I just have a 5K account, but what I have is 10,000. But let's just say $5,000 account. Whew. How many? Let's say in my country, Nigeria, here, how many people have $5,000 accounts? Not me. All right, not a lot of people have that amount of money. I know you get me. So in that case, you, what you have $40, you have $50. Yes, a lot of people can probably afford $50. $50 will be about that'll be about 80,000 naira or thereabout. A lot of people can actually maybe afford 80,000 naira. Still, there's still people that cannot still afford 80,000 naira. I'm telling you, like, a lot of people are poor like crazy. Don't be going out there thinking everybody's, everybody's dressing nice. They think everybody's just rich. All right. So for those people out there with that 80,000 naira, you can throw away 80,000 naira. You cannot not probably throw away, but you can play with 80,000 naira and lost it. That is just the same thing that you can just kind of money instead of playing around with it and lost it, put it in the proper account, because you have a high probable ability. You have the probability of getting 5,000 actual funded. There is actually maybe for funding next, there is actually $400 that you actually trade. You have $100 to play with than your $80. In fact, let's say if you had $400 self, you can keep on buy 5k account, 5k account for up to like 10 times before your, or more than 10 times before your $400 will actually elapse, which is actually giving potential. It increases your chances for actually getting a $5,000 account that you can trade with and withdraw from. I don't know if that makes sense. So that answer, it goes, is really about the kind of person. It's really about what is your financial status. Do you have that money, or do you don't, or do you not? Sorry. If you have the money, if I had, let me use myself in this case. If I have $5,000, I'll probably just fund my $5,000 I'm trading. But if I did not have that, I'll probably be trading the proper account. Proper account is the, it's like, it was what has really changed the trading game for a lot of people. It has really changed the trading game for a lot of people, like crazy, like really crazy. And it's in a sense that it gives you money that definitely you would have probably cried to get, or probably even though you were given it, you probably be afraid, and because of fear, you're going to lose that money. All right, you're going to actually lose that money because of you're afraid not to lose someone's money, because that means it's going to be for somebody. So proper account really gives you that, that risk-free mind. You like, after all, because me, every time I'm trading my 5k account, what I'm always thinking is, after all, is it not, because when I haven't bought it, was not even up to 80,000 naira. It was still about, sorry, it was not up to, it was $39. I think that's how much it cost in funding next. That was not up to, it was not, was it up to, it was not up to 50,000 naira at that time when I bought it. I don't, you get me? It was not even up to that. So it was about six something thousand. It was about six something thousand. So it was not even up to that, up to 80,000 naira. You get me? So right now when I'm trading, I'm like, is it not six something thousand naira? So now people are there. I used to, what I telling myself is that people are out there losing $100,000. Valuing themselves 100,000 to be. People are out there losing $500. People are out there losing $1,000. I'm here banging about $39. Like, it just make me just really not really care much about the account. Like, there's no need. Even not as if I have so much of the money to be buying 5k accounts. No, but just the idea, like, is this what I'm dying for? Like, people are out there losing 100, 500, 1,000. See someone's loss is 9,300 something dollars, and you're pointing about $39 or maybe $36. I can't remember how much a 5k account is. So I think I've been able to tell you what my own opinion is that for some people that would be a good idea, but for, and which are the people that have maybe a higher financial status than some other people, that would not really be a good idea. But now there is the in between. Yes, because Profem challenge, Profem proprietary firms also give you that, you know, that ability to really practice like what kind of trader you are, because that's the good thing about proprietary firms. All right, it gives you that discipline, that risk management, though some people don't still obey it. And I'm going to come to how to actually trade a proprietary firm, and that's what I'm going to actually be doing. All right, I've heard this from a lot of traders, upcoming and advanced traders, and this is also my advice: take it or leave it. This is my advice. Like, this is my advice for everybody. In fact, this is what everybody should be doing with proprietary firms. But look at the rules first, all right? Because I found out that it's very, and what is that thing I'm talking about? Is when you trade a proprietary firm, do not sit down and be doing 0.5% or not being conservative with it. Forget about, yes, you don't have money, whether you have money. Minimum you should risk is 1%, 1.5%. Right now, before I even next I get a proprietary firm account, that's what I'm going to be doing. Right now I'm in a drawdown, that's why I don't want to do that. But once I bring it back to probably the balance, that's what I'm doing. It doesn't make sense to sit down and be trading a demo account for months. You're actually trading a demo account for months. Like, it doesn't really make any sense. Yeah, like, that is, for that is like, I don't know. Some people just, in fact, highest should take is a month or 2 months, and you should be done. That account should either be funded or should be lost. 2 months max is what it should take. You should be in a demo account for 3 months. You're trading demo actually. What? Because I'm afraid to lose for a 5k $36, or for a 100k $59. Come on, like, crazy. That's crazy. You should be able to sit down and know that in the future you're not going to be losing this is chicken money. Like, even though you don't have them, believe that it is a chicken money. You shouldn't be afraid of losing. That's my advice. Don't waste first trade. In fact, no, I heard one guy say that that account should be gone in three trades. Three trades should be able to blow that account. But I mean, I don't really go to that side. But you should up to risk when you trade a proper account. You don't want to sit down, but when you not be able to pass it, and that's how actually you'll be able to pass it. Believe me, because let's say you keep on buying, at a point you'll be able to get, at a point you're trading when you're in a winning streak. All right, because you could be in a losing streak, but at a point it's going to, that probability is going to merge with your winning streak, whereby you risk your first three trades you're winning. You face, that means that, and that will make you able to pass one, two, three. You pass phase one, sorry, you pass phase one and phase two quickly, and get to fund, and then you go back to your normal conservative way of trading. That's what it should be. That's what it should be. So I actually got caught up. I want to tell you the middle part of the between the proprietary firm and the people that trade the proprietary firm, that it's advised to trade the proprietary firm, and the people that it's not really advised for them to trade the proprietary firm. Is the middle way. Proprietary firms actually give you that discipline. It gives you that discipline, or sometimes you just want to play around with it and see. Because me right now, I know that there's still a lot of traders, even high traders. They have the money, they have millions of dollars, but they still trade proprietary firm, not because they want to get money from proprietary firm, but just to sometimes want to just see what they can do, and sometimes you want to like show other people, see it's possible. I did it, and I as the level I am, I can still do it again. I know you get me. They want to tell you guys that it's still very very possible for these kind of things to be done, and it's nothing to really be very very, what's that? It's nothing to be really really uh, like crazy or to fear about. It's all right. That's the middle. Because I see, like, I know someone like Dax. He used to trade proprietary frame funded. He has a funded account. I also trade a live account. Like, it's very interesting. All right. So that aside, back to what I was saying. So that is the way to go about proprietary frame. You're risking it. You don't go trying to be conservative in proprietary frame. Let the money go quickly. Get out. You get our money. Believe me, you get our money. Don't sit down and cry. If you're crying about those kind of little changes or giving to different pro firms, then probably you're not ready for what is to come in the future. Because in the future, when you probably are that trading those big accounts, you're going to see bigger losses than that. So I think you should start trading your mind now, right now, to be able to handle those losses. So that is it for this video. Let's get into the chart, and I also told you guys for now, okay, about the dollar. Now let's get into the chart first. So thank you very much for in this point. Let's get to the charts. All right, guys, welcome to the charts and to the chart. All right, and last week I talked about how we were going to see dollar weakness and how the dollar was going to be really really weak, and it did play out the way I just predicted. And so what am I seeing right now? There's really nothing going on. There's still that downtrend I'm seeing, but I've seen liquidity being grabbed, and market's probably still going to rally to the upside or drop, but we are seeing a downtrend overall on the DXY. The DXY is still downtrend, so therefore we are still, the dollar is still showing weakness, and because we can see over here, wait a minute, because we can see over here this liquidity. I plotted the liquidity long ago, and that's what made me know that dollar was going to be very very weak. You can see how this market just came, cleared that liquidity and headed to the downside. Guys, liquidity concept, in fact, that liquidity thing, it's what changed my trading very well. I made a video on this. Liquidity changed my trading. Spotting out liquidity, it changed my trading very well, guys. It changed my trading very well, because I found out the market just used to sweep liquidity and keep on moving to the direction. Sometimes now, because of that, when I see that market kicked me out, I wait to see if it was a liquidity sweep, because you don't just hop in. All right, you just be like, oh, liquidity. No, you have to see some patterns. Me, I use candlestick pattern, especially. See, guys, let me tell you guys something. When the market just sweeps quickly, comes with no hesitation, kicks you out, or sweep a certain level where you really know that this is a liquidity area, and then the next candle engulfs the previous, that's likely a liquidity sweep. Because liquidity usually always happens. It doesn't mean that this high it will always happens. Usually it always happens. It always happens quickly. Market runs down quickly, sweeps all the liquidity, and the next thing you see that there's no candle that keep going down. The market is then next candle that comes up engulfs the next one. The next one probably just be come on a dodgy, and then see the market keep running up. It was just a liquidity sweep. It happened to me on the UK 100, and I entered the trade again. But though I still hit stop loss because the market still, I made my stop loss down very tight because I expected that okay, this liquidity market shouldn't come down again because of what the experience I had on a certain pair. So I was assuming that okay, shouldn't come again. It still came back, hit me out, and now actually went up on the UAK 100. So guys, on the DXY, you could see that on the daily, the market is still in a downtrend. So we're still expecting downtrend movement. There's really nothing to be expecting uptrend. But now we have seen liquidity sweep to the downside because all these places here, all these places, these two lines I draw here, these are all liquidity areas. The market is likely to react off of. Remember, when they get there, I do not take action. I need to see some candlesticks pattern or chart patterns that show me okay, probably market is going to react from this liquidity zone. I don't like to do like the SMC and NCT guys where they place their order and now expect market to come tap the money and go up. I don't like that. I like to first see intent that the market indeed is actually going to go up, not just to place order. I like to say okay, market indeed wants to go up, and then I'll now place my trade. So I like to mostly go manually. The only way I'll go by the orders is probably it has done it, and then I just say okay, if we can pull back to this zone, then I'll be willing to enter. That's the only way. But it mostly must have showed me a intent to go up. All right, so you can see these two zones here has been swept to market. Probably I was expecting that you were going to see in this area market pull back up, but as it changed the trend, no, daily still downtrend, 4 hour still clearly downtrend. So it's just probably going to be a pullback and maybe go down. So right now we're still seeing dollar weakness, but we cannot take, I cannot assume, in fact it's still just weak. It's still weak, so probably this week we're still going to see it being weak. So on the euro USD, this was the trades I took. I took two trades. One was a proprietary firm account, and the other, I don't know if you can see. Let me hide this big one here. This one is big, and this one is small. The small one is the one I took on my live account. All right, so this was the one I took on my live account. And you can see how it rallied to the upside. This is to pain every trader where you see like, but it's just part of the game. I used to say every trader do it, all right, because I was looking at it like, oh, just look at all these move, look at all you be calculating, look at all these move, look at all this move, but you will not be able to have hold that move. If you saw it, you will be like, ah, okay. So the balance there is just to strike a point. My max is always 1:3 and I'm out of the market. If I see potential, and I will hold it to for more than 1:3, but that potential, it needs to be that maybe I see a certain zone that the market still would, I believe market is still going to go to. But because me, I take a trade, and when I'm get my stop loss is usually at the next structure. So where people like me are probably going to get out from this market is in places like this. I'm likely to leave this market at this kind of zone. All right, so that's why you see me place my trade just above it, because I still knew that it's still going to go up. So I just placed my TP at that zone. So yeah, that was it for euro USD. That was the trade I took on my, that's the live account, and this one was on the proper account. Before I even told you guys I was going to take it, that I was looking for euro USD buys, that is dollar weakness. That was last week. I already took the trade. I was just waiting for the next week to open and for me to rally to the upside. So that was it on the dollar. So we are still going to be seeing dollar weakness. Probably there'll just be a drawback, and then maybe take over all this liquidity. See guys, see all these places here. These are all liquidity. This line I'm drawing here now, all these places are liquidity. So we're going to see market probably sweep them before I run into the upside. All right, because it's always normal to see market breathe in and then breathe out. All right, and for the yen, I told you guys let's not touch the yen. What should touch the yen? And that's what I told you guys last week, and today I'm not. The yen is still very indecisive. Let me check out the JPY basket. JPY basket. I think you guys nobody should be looking at the yen at all. Nobody should be looking at yen at all, because I'm still not really seeing anything. I'm just seeing indecisiveness. We're in a downtrend on the daily, but the downtrend is a choppy downtrend. You know, sometimes the market is actually going to be a go up, but there's a choppy uptrend. Right? It's just going to be choppy, but it keep going up. You see the market actually going up, but it's very choppy to go up. It doesn't give you any entry. It's just being choppy going up. That's just what happened with the yen. The yen is somehow weak, but sometimes it's just being choppy about it. On the 4 hour time frame, as you see a downtrend, there's nothing to be looking out for a sell, for a buy. And so for let's check out EOJPY, which is almost the opposite. You see this kind of market now, you can see it's actually going up, but really not give you any entry. I actually spotted this market was going to keep on going up around here, but there was no very good entry. I didn't like the way it looks. It looks so choppy around this zone. I was anticipating okay, market is going to go up. It gave me a lot of sign, but there was still no very good entry, not good entry. Like it was so choppy, I couldn't enter. So yeah, that's it. We are still going to be looking out for the yen. What is it called? The yen. Okay, sorry, you're not going to be looking out for anything on the yen, but the dollar, we're still going to be seeing dollar weakness. And I missed a couple of trades this week that got me annoyed. And man, this was a very good trade I missed on the euro pound. Very good one. Guys, price action is king, alright? Price action is king. Forget about all those NSMC and ICT things. I've not tried them, but I've seen people that confess that after they finish all those things, they used to come back to ICT, or sorry, they used to come back to price action, or they will have to mix it with price action concepts with the uptrend, downtrend, support and resistance. We'll have to mix it with it for them to again, same thing with all of that. That's what I see with all those other traders that trading. They always have trading ICT and the rest of those things. They always still have something they are doing, something that has to do with what's it called, with price action. All right. So this was a very good trade I missed because I went to take a very stupid trade. I shouldn't have taken this trade. This was on the oil, US oil. I took a loss on this trade, unnecessary loss. I think these two candles you see here with losses. These two trades you see here with both losses. I wanted to buy here and I took a loss, and I wanted to sell here and also took a loss here. Why? First of all, it didn't really match. The trades didn't even make sense because I don't usually trade this kind of thing, but I don't know why I was fucking trading it. But I preferred the loss I took on this down one here than the loss I took on this up one. This up one was so very foolish. Like it was not even messy. If you sit down and try to look at some of that trades that you think, you'll be very angry with yourself. Like I was like, what the fuck? Why? What was I even looking for here? Like normally I used to wait for the trend line to be broken and retested, but I didn't even wait. I just assumed it was going to break. This one wasn't better. This one was better. The concept, the confluences that made me take the trade were even fact somehow valid. But this one, nothing. I just took the trade. I should have waited for this Euro GPP because I was actually looking at the two, but Euro GPP made more sense. But because Euro GPP didn't play out yet, then I couldn't be patient to wait for Euro GPP. I when I can enter US oil. It was a very, very bad thing to, was not a good thing to be doing. And now this is also another trade I took on the UK 100, and I'm still looking out for the UK 100. But let it break this zone first before I be interested because I think this zone is very strong. So let it break it here and show me signs before I can now take it to another level. My lead line just off right now. If I can take it to another level, this was the trade I took. It was a very good one. You can see the liquidity sweep, but my stop loss was too tight. Normally, I like to keep it below structure, and then I came up. I still get tapped out, and then I rallied to the upside. But next thing I'll take out this trade is if I can see something like this. If I can see something like this, break and retest of this zone, then we'll rally to the upside. We'll take out this liquidity here. There's a lot of liquidity right here. Right, there's a lot of liquidity. There's a lot of liquidity here, so we'll run up the liquidity, but my stops will be probably just there. But I want to see market play up here first, go up here, and then give me a confirmation, entry confirmation. I'll ride it to upside. It's still an uptrend. Everything still ticks the box. Daily uptrend, the uptrend on the down, on the 4 hour, on the 1 hour, still uptrend. Everything's still neat. I think the market is not just ready because I think it was Friday, so it's not just ready. So thank you very much, guys, to staying off this point, and we'll see you next week Sunday. I usually post every week, and mostly Sundays or Saturdays. And let's call this a weekend or a week. What are we gonna call this today? Happy Sunday, guys.